Asia's top financial centers have been on investor radars for some time now, but with better technology and consolidation that stretches from Hong Kong to London, the region continues to grab attention. Here's what's happening in Asia and its prospects for growth.
The landscape looks very promising. It's very optimistic. Obviously, last year was a tough year, but it was nowhere near as tough as it was in other regions. Asia is still maintaining its momentum, maintaining its growth, and more areas outside of Asia are looking at Asia as a potential marketplace. And one of the issues that we've always had in Asia is the registration process for futures brokers and futures traders, which has been onerous. With the advent of futurization, they have to go through that. It's not a barrier anymore because they have to do it to do business. They're mandated to. A week doesn't go by where I don't get a call from someone I know in Chicago or someone I know in London asking me what's going on there, where setting up shop, what's the best way to do it, all the way down to where's the best place to set up. Do you have brokers I could hire? A lot of it is regulatory reasons. The regulatory system in Asia is they are waiting to see what works. They're not on the forefront, nor do they want to be. They will wait and see what works in Dodd-Frank and EMIR, and they'll wait to see what doesn't, and they will pick and choose the best.
After the most recent crisis, the capital stock in public capital markets in Asia became a much larger part of the world, just because the rest of the world came down in value. But also the quality weighting in terms of the creditworthiness of companies and the diversity of their businesses also rose in the global weighting. So automatically, anyone who's a global investor has to spend $1 more in Asia. The second part of that is that so much of Asia's capital stock is still stuck in either family or private wealth or sovereign wealth, because a lot of the initial industrial development's been driven by government assets, state assets. And all those assets, if you believe that the history of industrialization in the West will be followed, all those things eventually have to come to public markets. So that capital formation process isn't going to be over for many, many years. And therefore, for our business, which is fundamentally to offer access to the Asian capital structure, there's a very long runway.
They have invested very heavily in technology, all of the exchanges, and they're attracting the same global players that we have seen in both in Europe and the US. All of the exchanges in each of these cities have merged both their futures and their equities divisions. And while we haven't seen mergers with the exchanges themselves, as we've seen in Europe and the US, we are seeing a lot more cooperation or collaboration between the exchanges. These markets are continuing to grow. I think some of the Asian banks, in fact, are in very good health. And what they're looking to do is to expand their business into Europe and US and pick up some clearing. They have healthy balance sheets, and that will be attractive to a number of trading entities. I think the exchanges themselves will and do want to internationalize. And I think there's more cooperation and collaboration between the exchanges regionally, but also between the exchanges in Asia and the larger exchanges in US and in Europe.